We are preparing to live stream. That's it, fellas. We're live. It is 10:30 a.m. on the West Coast, 1:30 p.m. on the East Coast. That means it's value after hours in hours. Makes no sense.
Never did.
We
Never
all know.
will.
But now we're live. We named
It's
it. We went
about
live.
the vibe.
It
the
is
vibe.
That's right. That's right.
You're vibing hard with that shirt, Billy.
Dude, had to. I didn't like this shirt I had.
I'm
But
Tobias
yeah.
Carlisle. This is Jake Taylor and Bill Brewster. Just do name checks just in case there's somebody new watching. I don't know, just in case you don't know who we are.
There isn't, but that's fine.
You never know. In the future.
In the
I
time
feel
capsule.
like-
1,000 years when they spelunk this civilization, they'll find this and say, who are these guys?
And why were they saying what they were?
Yeah. Look at the idiocy.
I think the vibe has been fairly successful. You know, it's what we're going on almost 3 years now, huh?
That's right.
2019.
That's
it's almost
right. It was
December
it was-
of 2020.
Somewhere around.
It was Thanksgiving was the first one that I put out.
Wow.
It's been a minute.
That's a pretty good run. I would have bet the under on that one.
Yeah, me too.
I would have been under 5 episodes.
Yeah.
Well, the average is nine episodes. So
Oh, is
Once
that
we
the
made it
average pod?
once we made it to 10, we were already in rare air.
House money at
Yeah.
that point.
Interesting.
Let me do some shout outs because we got a good crew here today. FTX Phil, Win Arkansas, Belgium,
Whoops.
San Diego, Columbus, Wisconsin, Barrie, Ontario, Germany, Las Vegas, Defy, Downsville, Bahamas, Kennesaw, get it, Philadelphia, Pittsburgh, Dallas, Warsaw, Victoria, British Columbia, Nashville, Toronto, Bristol. What's up?
Boy, that's
Nobody
a full
from
slate.
Nobody from Townsville. Get on Townsville.
They're probably an
Budapest.
hour late because we moved.
Budapest, I can never say it. It's not Saskatoon, Saskatchewan, Toronto. All right, Calgary. There we go. Let's go. Fellas, lots has happened.
Yeah, boy, we broadcast a week ago, and like a lot of the world changed for a lot of people, huh?
What do they say? Sometimes decades go by and nothing happens, and sometimes days go by and decades happen. We've had a decade in a week anyway.
Yeah. Who was that? Was that Lennon said that, I think?
Sounds about right.
Might have
Yeah.
been.
Got some Aussies in the house too.
Yeah, so we have crypto in panic meltdown mode. We got Charlie on CNBC chiming in about it. We've got
Kathy's got a prediction. Google's got an activist.
oh, haven't heard that one
Inflation's
yet.
down, the market's up.
Murray 13F might be fun to go through that.
Tech layoffs. I got a list.
Buff
Arkansas.
Dog and getting Taiwanese. I don't know. We got a lot of stuff to cover.
Do it.
We're done. We just got Where do you want to start? Where are you
Yeah,
going
what's
to
the
get
most
the most
surprising thing?
fired up?
Okay, I got one. Musk is raising for SpaceX at $150 billion.
That's just one asteroid you have to mine.
That's
you
true.
just have to get one.
That's true. You lasso one asteroid and your money good.
It's all the gold in there. I mean, think about what that's worth.
There must be a lot of gold in the universe because there's a little bit on Earth and there's a lot of universe. So you just got to just sieve the universe and you got to like unimaginable amounts.
You know, I'm joking a little bit about that, but like that is actually sort of Kathy's argument about all of this disruption and plentifulness in the future.
I want to list just before we move on off SpaceX, I want a list of everybody who invests in that at $150 billion.
And you want to short the whole complex?
Well,
I'd like to know when he decided to do this. Was it like before he realized that he was incinerating capital on Twitter, or was it after?
Well, it needs capital. SpaceX is a consumer of capital.
Yeah, as it should be. Growth company, very capital intensive.
Didn't he put some money
I'm just
in
curious.
for advertising into Twitter from SpaceX?
Yeah, but to be fair, the slots on Twitter are cheap these days, so that's probably actually a pretty value buy on his part.
Is that right? Okay, that's
Oh, yeah.
interesting to know.
I got a good one from Robert Mackay here. He says,
Already we're going to the
get the asteroid headed for Earth, don't deflect it. Now that's second order thinking. We've been spending all this money trying to deflect asteroids. What we should do is catch it and mine it
Asteroids create jobs. That was what I learned from that
All right,
movie with
guys,
Leo DiCaprio.
Broken
hear me
window
out.
fallacy.
Hear me out. A big net.
Yeah.
How big?
We're gonna need it high
Okay.
in the sky, and we're gonna need the net to be big. And you want it to be made out of vibranium. So you got to
yes.
call Wakanda.
When they make the movie, you don't want astronauts who can mine because they can't be taught how to drill. You need guys who already know how the drilling equipment works. It's easy to teach them how to be astronauts.
That, you know what? They should make that movie.
Are you referencing that it was Ben
Yeah,
Affleck
he is.
doing
Yeah, it's a fantastic movie.
the drunken voiceover though? He was like doing
Bruce
the behind the
Willis
scenes.
was
That's
in
right.
it.
So funny.
It was a great movie.
Oh,
Aerosmith had that soundtrack.
Yeah, that was a great song.
Shit was hot.
banger. Yeah.
JT, sorry, you were going somewhere and I derailed it. It was an interesting place.
No, it was
Kathy's yeah. So Kathy's got a prediction. Kathy Wood has a prediction. She says all of the innovation in the world right now is worth 6 to 8 trillion. And I forgot the period of time. Was it 5 years or was it more than that?
I think it was a little bit more, but
8 years?
something like that. I mean,
I think it was 8 years.
30x, right? Is that what she said?
30 bag, which is $200 trillion worth of innovation.
Well, wait, she's saying it's currently valued at 6 trillion and it should be worth how much?
It will be
8
worth
years,
200 trillion.
Got a 30 bag in 8 years. I don't know how you catch it though. That's the problem. It's like
layup
lassoing
30 bagger from here.
One of the things worth discussing about something like this, and I think Jake pointed this out, like even if that is the revenue number, which seems unlikely to me, but let's assume that it is.
Well, it's not. That's the multiple of sales, right? So it's probably trades at a 50 times price to sales
That's the
multiple.
valuation. Yeah, but here's the thing, right? It's not a lot of innovation turns into consumer surplus. So it's entirely possible that even on those highly optimistic numbers, there's a big chunk of that turns into consumer surplus. And then the part that turns into producer surplus, that's just a revenue line. And then you got to be able to pull out some profit out of that. And you got to assume there's some competition in there, because I don't see $200 trillion in taxis. Like, we just become a taxi economy, do we? Like, there's people are either riding around in taxis or calling taxis, and there's nothing else, or owning taxi companies.
You know, I tried to get all of my venom out in our little DM thread that we have, because I didn't want to get on here, and go crazy publicly, but it drives me nuts. It is like she hasn't read any of like technological innovation and what that does, the cycles to it, how it turns into the installation phase when it just becomes kind of normal life,
it's
normal
toaster.
cost of
How
capital.
far away until it's a toaster?
This makes my brain hurt. It makes me angry. I just want to.
I read something interesting that one of the VCs said, where they were like, you just have to be a VC, you just have to be a pure optimist. Like, you have to be a goldfish. You can swim around, take a giant hit, swim around the bowl once, come back around and stick your money into SpaceX at $150 billion. Like, get dusted on FTX.
No, you can't do that.
A week later, stick your money into SpaceX, because they just need
goldfish due diligence.
I don't think that that's true. I think what you have to do is you've got to get, like, you got to bet on people early at small valuations and then flip it to the people that want to go into SpaceX at 150 billion. The VCs that are putting into SpaceX are going to get waxed at this multiple.
But look at the list of people who put money into FTX at, like, putting in hundreds of millions of dollars. Like, I get that $300 million is 3% of some of these funds, so it's not much, but still, it's like, that is a lot of money if you got to save it all up.
Yeah,
on the paper route.
I don't know what's true and what's not, and I certainly.
This is for speculation, mate. Podcast, just speculate away.
Yeah, but I don't actually. Hang on, give me a second.
Bill's doing more due diligence on answering this question.
Well,
VC's doing sticking the money in.
Can I drop the Charlie Munger quote from this morning right now?
Yeah, that was a good one. Let's do that.
Nobody's gonna say, I got some shit that I want to sell you. They say it's blockchain. End quote.
I'm interested to know why Third Point was in FTX. I think that's an interesting, and I think he made a bunch on Upstart. Yeah. So I don't know. It's kind of interesting. I'd love to interview him. I'd like to ask him those questions rather than like making a statement about it. I don't have an opinion on it.
Yeah.
I just find that to be an interesting firm going in that way.
Make that happen, Twitterverse. I'd love to hear that interview.
Yeah, I mean, it's tough to ask those kind of questions, but I think I could probably do it. Because I'm legitimately interested. This guy that I've looked up to and read for a long time, like, I mean, he's got a hell of a career. It's kind of interesting to see them morph that direction towards this part of the cycle as I perceive it. But maybe they did a long time ago. Who the hell knows? Or maybe the reporting's wrong. Also a possibility. Lots of fake news in the world.
So what do you guys think about using price to sales then? Is that still going to be a relevant metric for all this, for a toaster in 2032?
Here's the thing. I do think that there is a place for price, like quantitatively, price to sales, in one of Jim O'Shaughnessy's early versions of What Works on Wall Street, price to sales was the king of the price ratios because it's for the sole reason. Yeah, it's just constructed from the top of the statement down. I also think when you go through a really, I've got this personal bias that we're probably headed into a recession. We're having a little relief rally here, but ultimately we haven't seen the end of this, the tail end of this bear market. At the bottom of the bear market, price to sales, cheap on a price to sales basis might not be a bad idea because if things aren't earning, but they've still got lots coming in the top, where you have just a little improvement in margins and you get them cheap on a price to sales basis, like those things probably rocket out of the bottom. I'm not doing that. I'm just saying it's not a total joke metric is my point.
Yeah. I got a text from a banker buddy that said that he's starting to feel it in the commercial banking market that lending standards are getting tighter. It's getting harder and harder to go to credit committee. He said the sole bank deals you can still get done, but the syndicated deals are getting tough. That is not stuff you hear in the last innings of a recession. I don't think that's
the beginning.
That is credit contraction, which last I checked does not increase the velocity of money out there.
Well, when you get scared, it's hard to take third party. You want to be looking at it yourself. Do you want the syndication? You trust the DD on those other guys?
Stocks have probably already, you get a sim and you get to do your own due diligence, but stocks are probably discounted a lot of this, but we are not, if we are close to the end of the stock bear market, we are not close to the economic end. I don't think.
Well, this is one of my talking points here was the tech layoffs kicking off. So I retweeted this morning. I don't know how good this data is. This is from a Twitter account. I got no idea if this guy knows what he's talking about at all, but he had some data and it did sound like he knew what he was talking about. So never heard this.
Is he anonymous? If he's anonymous,
no. He's got a blue check mark, so he's got the $8 a month.
So it's good
to spend. So he's got a list of all of these tech companies.
Is this Chiquita Banana?
This is no.
Okay.
No. Tech layoff. He's got Meta at 11,000, Twitter at 3,700, Intel 20%, Snap 20%, Netflix 450, Robinhood 30%, Stripe and Lyft at 13%, Salesforce 2K, Amazon 10K. It's like 120,000 plus layoffs. 2001.com layoffs were 107,000. Q4 layoffs have just begun. A brutally cold tech winter is coming.
Maybe for the employees in Techville.
For the shareholders too, potentially.
I think that winter has come in a lot of cases, but yes, it's not
yeah.
over. But I mean, they're chilly. If you're down 90%, you're not feeling great.
And there are some that are down a lot more than that. Blue Apron. You guys remember that? That's down about 99%.
Yeah. I'll tell you one that's kind of interesting is Redfin. Now you can look at their financials and I'll tell you they make nothing, no cash flow, no nothing. But $500 million for that asset, I don't know. I could see that having lead gen value to somebody for $500 million.
For sure.
Shout out to my man Bluth Capital for putting that on my. I mean, I've been watching it go down, but I didn't realize how low the market cap had gotten.
When do the tech layoffs actually? When do layoffs show up in the data? Because we know that there's the HOPE housing goes first. We've certainly seen some, at least price destruction in housing I forget what the O and the P are. I just don't care. And then there's E at the end, which is employment as a lagging indicator. And once you get the bad print, the really bad prints in employment, typically we're closer to the bottom than the top. But employment still seems very strong. That's what everybody keeps on saying. You know, there's still this shortage of employees. So we're a long way from that point. And it's possible that says that we're not even, the recession's not coming. That's a data point that seems to be at odds with all of the other data points.
I mean, the advertising market has slowed significantly and banks are tightening credit. This is on its way.
That's what I think too. But I'm trying to like think about the other explanations. Like credit card use seems to be sort of trending back to its long run mean, where it was down for a while, I guess, because people were getting some COVID shutdown type relief, and that's now sort of working its way out. The savings numbers were crazy there for a while. Like people have saved much more money than they have at any other point in time, and that's still not back to trend. That's still above trend. People are still holding more cash. How you square that with credit cards being way up, I don't know. Maybe they've taken those savings and stuck them into Bitcoin and stuff like that, and now they're down on that. That's not counting. I don't know.
Woman that takes care of my grandma, poor lady, had like 30 grand in savings and put it in some freaking crypto thing because they promised her 6%, you know, because of yield farming or something. Poof.
Damn.
That sucks because I know her, but I'm like, also, you could have just asked me and I could have helped you avoid that.
I mean, you remember like a year ago, even 2 years ago, just the fact that we went in that stuff, like the heat that I was getting on Twitter for not being in any of that stuff, for just saying, I don't think so. That's all gone away now.
Some guy keeps coming at me about interviewing Preston Pish, tells me, you know, I interviewed a Charlotte and I just wanted to talk to Preston. Thought it was an interesting interview.
Preston's an interesting guy.
I don't know that Bitcoin's even, you know, that may survive. I don't freaking know. I've never known. I don't understand buying a promise. I don't understand how crypto is any different than fiat, except for fiat is actually backed by the US government, which I trust more. Now, maybe that's because I'm some capitalist or cuck or whatever. Like, I don't know what I am, but I tend to like the dollar. I like going to a bank and getting dollars. I like actually go into branches and I can touch it and feel it. And I know it's FDIC insured. It's kind of a crazy thought, but
only up to 250K. But if you got 250K in your bank account, then good for you. Well done.
I mean, and also, you know, next year 250K will be a cucumber.
Yeah, that's right. One espresso. Tom Brady has had a cracking year. He's getting divorced, and he's put 650 million into FTX.
Wait, that's how much he put into FTX?
I don't know if that's right. I think he got granted
650
or whatever the hell they're calling it in FTX for being a spokesperson, and that's probably
650 million worth.
Kapoof.
It's just promises, man. It's just tokens that don't mean anything anyway. Why not give them away?
Totally. We'll just make more.
He's incinerated himself in 12 months. Wow.
I haven't paid a ton of attention to this, but I talked to Kyle Sermonara yesterday about this issue. He is
Tom Brady specifically.
He's more heated about this issue than I've ever heard him upset about anything.
Which one?
Well, so I can't articulate it like he can, because, you know, I mean, he's a legit analyst and has gone down a rabbit hole on this, but like the amount of like fraud and blatant, I guess it's fraud and who benefited. Like he's like, you know, maybe my interpretation of what he said is maybe a better way to say it than putting words in his mouth, but he's like, you know, Brady, like there are people that got money out of this that are well off.
Matt
and there are people that got smoked.
Fortune
and the idea
the
that the people that are okay still and got money out of this whole system don't have to give it back to the people that got smoked is like morally offensive.
Matt Damon.
Yeah, that's
I mean, Matt Damon can afford $10 million to give it back or whatever the fuck he made. Like, I know it's a lot of money, but he can actually, it's like Chris Rock's joke, if you got 50 million and your wife won 25, big deal. You're not starving. But if I got 50,000, the bitch won 25, I might have to kill her. It's the OJ joke. Anyway, watch the special. It's not me, it's him. Anyway, like, I just, it's a shame. I feel for those people. I feel for the girl or the woman that takes care of my grandma that lost everything. And, I had to advance her. I mean, I didn't advance it, but I gave her Christmas bonus early so she'd get her car repaired, and like Matt Damon's fucking still on commercials, probably cashing checks.
Just about, that line, fortune favors the brave. So this is something that I put this in my book before Matt Damon says it, actually. I had it in there and I looked it up and you can find it. Like, it's lots of militaries around the world, lots of special forces use that expression, fortune favors the brave, or different variations of it. And so I was trying to find what's the original, like, where did that first come from? And one of the early ones that I found, Pliny the Younger, describing Pliny the Elder, who evidently said it. So Pliny the Elder, and this is ancient Greece. He's going to investigate the eruption at Mount Vesuvius. And he says, fortune favors the brave. I'm heading for Vesuvius, there to meet his doom, never heard from again. Last thing he ever said. When I heard fortune favors the brave on that Bitcoin ad, I was like, how about
Makes
that? History repeats.
Yeah. Well,
when did they learn to brew beer?
One of the, yeah, exactly.
Those are good.
The one of the Cardano, I think it was, is named after a guy who was a total degenerate gambler in the 1600s, but came up with some little bit of math on something gambling wise. But I was like, they kind of told us how this was going to play out, didn't they? Like, this is pure speculative gambling.
I do think if you run the tape back, I've been open to the idea of crypto, but the other thing that I know that I've said, you guys have been much more skeptical than I, so you're more right than I am. But I did say this reminds me of the late 90s in that area. And the late 90s, there was a lot of dog shit that was floated to the market. I don't know that it brought down any exchanges, but I think people are seeing it now. And probably out of the ashes, there will be a couple projects that are maybe even worth buying and investing in. But
I don't.
Right now, this is when the fire is burning.
I got another sort of slightly, this is a little bit off topic, but I saw this tweet this morning. Mark Brooks tweeted this out, and this is something I've been saying over and over again, and he articulated it really well. He just said, this is the fourth straight year of trash year-on-year data where you can't get a good comp. That's right, because we've had a COVID crash, money printing boom. Now we're coming off, plus the stoppage in global shipping. Now we're sort of halfway back to normal, but the housing market's crashing. Like, this is just as a business person, how do you plan through something like this? Isn't this the kind of thing that makes people just say, let's just pull back for a little bit and make sure we survive to the other side?
I would counter that to say that I think this is more the norm than in the last 10 years were the abnormal thing where nothing really bad was happening.
I think COVID.
That's a good line.
I think COVID's a little bit different, but yeah.
What was the response to COVID then?
Yes, that's correct.
COVID was probably stimulative, in the same way that broken windows are stimulative.
It shocks me that China's still apparently locked down. Like, this is fucking crazy. Somebody come at me in the comments, tell me it makes sense. It makes no sense. Yes, I live in Florida. I get that maybe we're a little too liberal on it, but that's insanity.
I saw a stat that said COVID deaths are down 90% this year. I don't know if that's true or not. It's just another internet stat that I saw. You can let me know.
I want to know how many people are forced to get skinny in China right now.
Get a what?
Get skinny. Get on a treadmill.
I'll get skinny.
I know you can't say that, but it's a big contributing factor to deaths.
Some bloke just ran a marathon
you said
for the
it.
third time. He smoked
Dude,
the
you
whole
said
way
it
through.
straight off the bat when we talked about what are you doing, and you were like, I'm gonna make sure that I lose weight. right off the bat, you were like, I know that is because, you're like, that's a major contributing factor to a lot of death. We're going to get a COVID thing on Spotify. It's going to have a blue bar.
I don't think they care
this
anymore.
Episode.
They
do, man. They still label a ton of stuff. It's ridiculous. It's the one thing they'll label. The only thing. Okay. So stupid.
How do you guys think that this SBF thing plays out? Like, what's the ending of that story?
Hope he goes to jail.
Okay.
Assuming the charges, that are alleged are true. And if they're not, then we'll see. Somebody seems like they should go to jail over this shit.
I don't know what the story is, but if it is the case that FTX has rehypothecated assets to Alameda and they have levered up and then smoked them in the crypto crash and are unable to return them, then
was I not supposed to do that?
Sorry, officer.
I got to plead ignorance on this one.
He's still out there tweeting. Like, I would have thought that he's either confident that nothing's going to happen and they've done nothing wrong, or he's an absolute idiot, because I would have thought the lawyers would have just said, stop saying stuff publicly.
Yeah, or his lawyers are like, you're so screwed, it doesn't even matter. I don't know. I mean, I doubt lawyers would ever say that. Yeah, there's
no contrition at this point, right? They'd just be like, express contrition.
Well, he did that. I mean, he said he was sorry and he messed up. So, water under the bridge.
There you go.
Should have worked at a big bank in 2008. He'd walked away.
Yeah, good point.
Not
when the music's playing, you got to keep dancing.
Guys should have gone down for that too, and he should go down.
Do you know in medieval times, if you're a banker, they stuck you in the stockade and arrested you, basically stuck you in jail, and they gave you 12 months to pay it off. And if you couldn't, they just chopped your head off at the end of that.
How are you going to do it from jail?
Well, that's part of the problem. Hard to pay it back.
Kind of fucked up.
Hard to pay back the 300 million with the paper route too.
It's fair.
We do that to poor people in this country though, too. Like, they hit them with fines that run while they're stuck in and they can't get to work. And I mean, if you dig into the criminal justice system a whole lot, it's kind of gets a little depressing.
Yeah.
It's for selling dime bags, man.
Come on.
But whatever.
Let's keep some perspective here. Where's the common sense?
This is true.
Left a long time ago. So I got just to continue the data point.
I like these topics, man. We're really running through current events.
Yeah.
So I got, we've had this monster rally over the last week. Michael Guyard in particular has been calling for a melt up through the end of the year. And I think his thesis is he's so bearish, and so is everybody else, that any slightly good data point leads to this giant run up. And I don't think he's necessarily saying run up for fundamental reasons. He's just saying sentiment is so bad, we're likely to see a little bit of run up.
Oversold, basically.
Yeah. And we've seen that, and who knows where that goes to, but I still don't think that he's saying it's all clear, and he's not calling for a new bull market. But
no, I think he's saying it's a run up before a flush. I think.
I think that's what he's saying. I think that's what he's saying too. That's kind of trader stuff. I don't know one way or the other. I'm kind of looking at a little bit. One of the things that I think is that we've seen inflation come off a little bit, and that has led this monster rally in the market. It was coincident with that day where it came in at 7.7%, which means that it's down, or it's no longer. I don't even know what it is. The rate of change.
Yeah,
it's still pretty high, but I would have thought that probably the likely scenario for inflation, or what typically brings it down, is you go into a recession. And I think that's probably what's happening. The 10-3 is inverted, got a pretty good record, hasn't met Cam Harvey's definition yet, which is 90 days of
90.
Yeah, a quarter of being inverted.
But we're on pace for that right now still.
Well, it hasn't. It's like negative 0.46 the 3-month over the 10-year.
But the clock is running on that quarter.
Yeah,
is what
still,
you're saying.
It's not. Okay. It's only 10 days in or something like that. And who knows? It could be over tomorrow. But
that was a long 10 days. I could have sworn it was. It's got to have been at least 2 months.
No. It's nowhere near. It got really close, then it just stalled out for a long time. But it has actually inverted now, and it's at 0.46 negative now. I think the depths of 2019 was like 0.49, so it's pretty inverted right now. If that does, in fact, if the slowdown in inflation is in fact, leading into a recession, which is what the 10-3 indicates, then that means we're in the worst sort of bucket for these big drawdowns too in the stock market. So we're down like whatever, we're 15% or something, or 20% from the all-time high. And then typically like there's another, that's like halfway. If you're in a recession, we've got another 20-something% to go, which would be closer to.
This is what makes me so nervous about big tech right now. People are like, it's cheap. These are people that have not liked big tech in the past. And all of a sudden you've got these businesses that have bloated cost structures that are working on cutting them, but are slow to do it. And I don't even necessarily blame them for that. I don't know that you should manage your business for the stock market and keeping your stock high. But you've got bloated cost structures, and you've got cultures that are not quick to fire. And to the extent that there's cloud, you've got more fixed costs probably than you used to have. And just reminds me of Top Gun when he was inverted, I could see them I could see them flashing some results that people are like, wait, I didn't realize that level of operating leverage was in that business. And it's not as fun.
A lot of
when
it's ad based as well. We talked about this a long time ago about how is there any concern for everyone in big tech of how much of the market cap is derived from advertising dollars?
Plus the VC plus advertising, whether you are actually advertising
historically had been somewhat cyclical, which
and social is easiest to turn off. That said, Meta's a buy.
I love how you do that. Here's all the reasons why this is terrible. Also buy this.
But I think that's right. That's right. That's
probably right.
We had our big thing on Meta. That was part of the TIFF. The other part was my shitty attitude. But when we had our thing at the end of that show, I was nervous. I don't know that I couldn't have articulated what came out, but now I honestly think if you like value and you like good businesses, I don't see how you don't buy Meta. I don't see it. It may not work, but that company is cheap as fuck right now.
It's quantitatively cheap. It's just whether you get, and all of the arguments are kind of in the price. Like it can go cheaper from here, and who knows? If this thing, the business might be irrevocably broken.
But it's not though. Look at the results in core. And yes, the margin structure has gotten worse and returns on capital have gotten worse, and it deserves the D-rating because it can't ride on Apple anymore. And it requires CapEx and all these GPUs for AI. And I get it. That business is cheap right now.
Well, so you sealed into that
Oculus it's not a sideshow, right? He changed the name of the business to Meta. But I really think you've got to get yourself to the point where you believe that Zuckerberg can't possibly pivot the metaverse bet to think that you can't buy it here. And I don't think he's that dumb.
You are sort of on a suicide pact with Zuckerberg, though.
100%. But you always have been.
Yeah. True also in Google. And this is one of the points that this was like leading on from you got in front of me a little bit there, but the tech's over earning. It's becoming very cyclical. Tech has a lot of layoffs. You're stuck in the same thing with Google because I think there are two classes of shares in Google and neither of them vote. There's 3 blokes who control Google and you never hear from them anymore. They've wisely hidden behind their gated communities. So the people with the pitchforks don't come with them. They got some human shields out in front of them. But TCI, Chris Hohn's outfit, has gone activist on Google. They've got a $6 billion stake and they say there's too many employees. Do you think there's a couple of things going on there. There's nothing that they can do from outside other than sort of shaming them into letting people go. But that might just be the cover that they needed. This is perfect. Let some people go.
I talked to a guy that sells for Google Cloud. He said he thinks that Google Cloud is by far the best technical cloud. He loves selling the solution. He's not the sales guy. He's the guy that the sales guy brings in on the engineering side. Then he said, Now that the stock's down, I look around the office and I think 50% of these people could get fired.
Yeah.
Without any interruption to.
Yeah. He's like, I welcome it. Now, you know, that it's kind of tough to say that and survive, but I heard the same thing out of Wells Fargo people when those layoffs started. And I think that some of them would argue that the business is running more efficiently now.
In another life, I sold some deep sea fiber to Google, and their entire team, which was bigger than our whole organization, flew first class and stayed at the best hotel. And I was like, there's a little bit of bloat there. You could cut back on that a little bit, and that bottom line is going to get a lot fatter.
Yeah, I mean, you know, I want the value investing group over there to all get raises, but outside of that, you know, it was super cool place to visit. I love that, and I think that there's merit in keeping a workplace somewhere that people want to be, and I think that there's probably a way to do that at 15 to 20% the cost. As someone who worked at a bank once and looked around and people were reasonably happy, I guarantee you we were not living like that. We were trying to get free coffee pods.
Well, Musk says that the Twitter lunches cost $400 a head.
It's not, I mean, at Twitter, I could buy it.
I find that a little bit hard to believe, but that's a big number.
Yeah, they probably give you some allowance to go out and eat also, so they don't have not everybody eats the food. That's probably what's going on there.
Give me a $50 stipend and the other $350 in my pay packet. Or give me the $350 and I'll bring a brown bag lunch from home.
Yeah.
Save you $50.
I ate sardines and onion yesterday. How much is that? $4, like Biggie Smalls, homie.
JT, you got any veggies for us today?
I do.
Hang on, don't we have more? We got Burry's thing. We gotta have more.
We can get that after. How about that?
All right.
We'll pick it up in the Q&A section.
Yeah. You do a lot of work for this show, so you deserve the 15 minutes.
That's not as much as it seems. All right. So we are going to be talking about the 1998 Hungarian Grand Prix F1 race. So feel free to chime in with your F1 knowledge, Billy, because you know more about it than I do. But so in this race, Michael Schumacher, who's one of like the all-time great drivers, is racing for the Ferrari team. And the two McLaren cars for their team were faster in their qualifying times and had better starting positions. So that's sort of like the setup for this race. Now, as you guys know, like raw speed isn't always the deciding factor in winning races. There's actually a fair amount of decision making that happens that's also key. Like, how do you plan for the race? What's your approach to pitting? And that's what we're going to be talking about here. So all the other teams for this particular race chose a 2 pit stop strategy. So that was their plan. Like, you know, how much fuel, tires, all that stuff that gets, you know, they change it in 10 seconds. So Ferrari decided to be nonconformist and they did a 3 pit stop strategy. So here we have these like kind of competing strategies. So you know, probably fairly wondering, you know, you're sitting in the pits, the clock is running, everyone's out there going 200 miles an hour while you're stopped. How are you going to win if you're obviously way slowed down by sitting in the pits for, you know, a third time when everyone else is only doing 2 times? And so if you're Ferrari and you're starting with a weaker starting position and, you know, you're choosing to be in the pits more, like, doesn't that seem like kind of a stupid strategy? So here's what the difference was. First of all, amount of fuel. So fuel is heavy, relatively speaking. And at this track, each additional 22 pounds of fuel cost a car about a third of a second per lap. So if you imagine using 3 stops, Ferrari was able to run with around 66 less pounds of fuel through most of the race, which enabled them to go faster by 1.1 seconds per lap. And so I would say, like, sort of the takeaway for the investment side for this particular part of it is that, you know, obviously having a smaller asset size is a bit of an advantage because you're more nimble. You can go places that other people can't go. You're not burdened by size as much. Number 2, by doing 3 instead of 2, Ferrari was basically out of phase with their competitors. Like everyone else is sort of all stopping at the same time, roughly, but they're doing 3 instead of 2. That gives them more free time out on the track when it's relatively open. So there's less jockeying for position. They're able to run more like qualifying laps, which is, you're out there racing almost by yourself. So you can go faster. You're not, trying to get around people who are going slower. The takeaway from that would be that, maybe and I'd be curious to hear, Toby, if what your quant testing about this says, but it might be better to lag some of your rebalancing in a quant strategy to sort of be out of phase with what everyone else is doing.
You got to be out of phase with SPY. That's what you got to try to do.
Is that the key?
SPY rebalances. Everybody rebalances around SPY.
Okay. Yeah. And did you find that was like advantageous? Like if you did stay out of phase with everyone else? It
was more an operational thing, just that it was hard to do it on those days. You were better off doing it on other days. I'm not entirely sure that there's a performance advantage to doing that, just that it's easy on the ops team.
Okay.
Which probably is a good thing.
Speaking more qualitatively, if that's more your game, like I personally try to wait like at least a week before I go look at a new 10Q that's come out. And a lot of it, I just want to let the noise die down first, like let everyone else pit stop together on it and fight and, try to figure out what it's worth and be influenced by Mr. Market. But I'm going to try to be out of phase with them, let it die down and process the information. Hopefully have a little bit more of a qualifying lap for myself to not have to like dig through as much.
Do you worry that you're going to get you get secondhand reports of what's in there before you get your own look at it?
Yeah, that's why I try not to read anything about it.
Yeah, fair enough.
I don't want anyone else's voices in my head. So, and then the third thing that happened was tire choice. So Ferrari was able to make different tire choices as the track conditions changed, and everyone else only got to make 2 decisions as opposed to Ferrari got to make 3 decisions. So, the takeaway there is that even though it can feel like it's kind of taking more time than necessary to have these extra pit stops, it's useful to be able to sort of evaluate the track conditions that you're in more regularly than maybe some people, which might look like re-underwriting a lot of your positions as it feels like track conditions are changing, and really asking yourself, like, do I need to make changes in the portfolio based on what the conditions look like? Do you have the right tires for the next section of the track? And like Buffett is largely celebrated for having these long holding periods. That's what he wants to hold forever. But I think it's instructive to remember how quickly did he punch out of airlines when he felt like the track conditions changed. So I feel like it's a little bit underrated how, he's willing to pit stop maybe more than others will give him credit for. So in the end, Ferrari ended up winning the race, and by choosing what apparently looked like a slower and more laborious process by having 3 pit stops instead of 2. And yet it allowed them to make adjustments in the race that other teams couldn't. And so I think there's just something to be said about our process and really thinking through it and having more check-ins maybe regularly on your investment process and not letting it go too far and drift from what track conditions are changing.
Let me ask you a question. So you pit 3 times instead of 2. So you've got 10 seconds of additional time that you have to make up somewhere. And you say that you carry 66 pounds less fuel, which means that each lap on average is 1.2 seconds faster. So that means, say you got
all else equal,
8 laps,
right?
All else equal. So you got 8 laps.
You get new tires
to catch up. New tires, okay.
Those gonna make you quicker.
8 laps to catch up. So, how many laps are those races? How many laps is that race?
I don't know how many laps that race is. I don't know, BB. You probably have a better sense of.
I don't know that one. No,
more than 24.
Let's assume Ferrari calculated
there
that there were sufficient laps. Yeah, there are more than 24 for sure.
So it's like 50 or I don't know, 100.
So it's like
it was 86, I think.
It was a quantitative decision. So it was a mathematical decision that they were able to, even with 1 extra pit stop, that would make them, provided they made some adjustments. So as long as you don't run with a full fuel tank, you run a little bit lighter because you pit more often.
Right.
it is interesting, but then you've got some risk, right? Because every time you pit, there's a risk that the pit stop.
Yeah, something goes wrong.
Yeah, that's true. It's like you can't get the tire off or something bad happens. But
you're zigging with the zag.
That's a cool strategy.
You are trying to zig a little bit.
Is that no longer the case that the?
Can we say zig? Are we allowed to even say the word?
The cars are
without
zigging.
Context. It's okay.
Okay, that's good. Yeah, it's like Voldemort.
Yeah. Hello to whatever SEC
you can't say bomb on a plane
this in the future. Yeah, that's interesting, JT. So it presumably makes you a little bit more robust too, although they were running with less fuel. So they were running about up to the red line as much as anybody else was.
But I was thinking about this too. Like, I think there's something to be said about running with a little less fuel psychologically, like less stuff weighing you down, that extra stress outside that might be coming in and, impacting your decision making. I mean, I think running lightweight up here mentally is actually a pretty big advantage.
It's one of the reasons I like smaller position sizes, because you don't have to put so much, once you're getting to like an 8% plus position size, you really got to be pretty certain about what you're doing. And I just can't get to that level of certainty, which is why like at 3.5%, you can be pretty zen. Like I would consider like Facebook at 3.5% is a no-brainer. Bigger than that, I'd start getting like, now I've got to really know what's going to happen, and I don't think you can. I wouldn't be comfortable doing more than 3% for anything other than Berkshire, like those kind of enterprises where you're just certain.
I don't know how certain you can be with Berkshire. I understand why you say it, and I'm not trying to talk down on Berkshire. But
what's the concern?
Well, you got two of the guys that have let it are about, going to be gone. Like, I don't know what it's going to look like in 20 years. Like that thing can unravel a lot quicker than I think a lot of people want to admit. Myself included.
Might want to have a pit stop before that 20-year marker. Just check in.
Yeah, that's a fair point.
I think we were talking, Jake, about the Weschler interview, or wasn't it Todd? Who was it? Combs. Yeah. Ted Weschler. Anyway, and I think that's part of what were we talking about offline? It's the 15 PE.
Oh yeah.
That's going to grow over the next 5 years. How did he frame that?
Pull up my notes real quick so that we can.
I think that's what he was saying.
Get the real one.
You solve for stuff like cyclicality, like what probability would you say that this is going to be higher? I think that's the test that Facebook potentially fails, because I think everybody in the world is concerned about duration risk, right? So even if all the data can show you right now, the business, the core business is pretty stable, I think in the back of everyone's mind is like, yeah, but it could be, the next MySpace. Whereas to Jake's point, over the past years, something like energy, you can argue that there's going to be some EV transition or transition to electricity over time, but like oil is going to be here. So, or refining capacity, for instance, is something that looks like it's going to be pretty constrained for a while. So maybe when that gets really cheap, you can bet that a little bit harder than you can bet when it's something that's maybe as amorphous as Facebook.
Something low Lindy like Facebook.
Yeah.
So Combs recalled the first question Charlie Munger ever asked him: what percentage of S&P 500 businesses would be a better business in 5 years? Combs believed that it was less than 5% of S&P businesses. Munger stated it was less than 2%. So that's the first little thing here, which kind of surprising. Like, you would think 2% in 5 years. I feel like that might not be the base rate. What do you guys think about that?
Well, there's the Mobison. I always think as soon as I read that, I thought immediately of the Mobison research that he does, where he looks at the buckets of return on invested capital, and he shows and he's been doing this for a long time now. So it'd be interesting. He's probably done it for more than 10 years. So he can probably actually look at that initial crop, but every year he updates it, and he looks at just ranking every company in the S&P 500 or Russell 1000, whatever it is, by return on invested capital, create 5 buckets so that the highest return on invested capital is in the top bucket, worst return on invested capital, which is typically negative return on invested capital, in the bottom bucket. And then you wind that forward over 10 years, and you can see that there's this incredible mean reversion. So that is the pervasive force. The really bad ones get better, the really good ones get worse. They don't actually ever meet. It's kind of asymptotic. So the best ones are still better at the end of that. But then that's not discussing the valuation in there. But the thing that stands out to me from that, there's 4% of businesses that are in that top bucket that don't mean revert. They tend to sustain those pretty high returns on invested capital. So I would have thought that 4% is probably statistically the number, but whether they're better or not, I don't know. So possible that Munger's right. Like of the 4%, only half are, better after 10 years or 5 years.
So Combs goes on, you can have a great business, but it doesn't mean it'll be better in 5 years. The rate of change in the world is significant, which makes this exercise difficult. But this is something that Charlie, Warren, and Todd think about. When Combs started at Berkshire, they had a 7 out of 10 confidence of the business's outlook for the next 5 years. The nature of the world is that things are constantly changing, and Todd said that they are right on maybe 1 out of 10 predictions. So that should have been a headline to me. Like, they thought that when they first started, like, he felt like they were good at 7 out of 10 predictions, but the world has become so hard to predict that now they think they're only on like a 1 in 10 batting average.
But you got to be, surely you're 50-50. Like, surely it's not 1 in 10 means that you're actively wrong. Does like 1 in 10, surely the base rate is 50-50.
I think it depends how specific you want to get with why you're right.
Oh, fair enough. Well, that's like a Tetlock type thing, right?
Yeah, it is. This is probably their entire population of predictions, even the ones that are on the low confidence kind of interval. But it's still, I think if you asked me to guess what they would have said for that number, I would have never come up with 1 in 10. I would have been maybe coin flip.
Yeah, I know the strike rate in back tests for various things that I do. It's 50-50. And you're hoping that you get a bigger payoff in the stuff that works than the stuff that doesn't work. But that's not always the case. It cycles.
So, Bill, here's what you were referencing. Combs goes to Buffett's house on many Saturdays to talk. And here's a litmus test they frequently use. Warren asks, how many names in the S&P 500 are going to be 15 times earnings in the next 12 months? How many are going to earn more in 5 years using a 90% confidence interval? And how many will compound at 7% using a 50% confidence interval?
Has he just told you his formula there?
Well, Combs said that this rubric was used to find Apple since at the time, the same 3 to 5 names kept coming up. So in this exercise, you're solving for cyclicality, compounding, and initial price.
Yeah. When he says 15 times in 12 months, what does he mean by that? Which way? Like it's going to be reverting down or reverting up? Well, what's the directionally, which way is he going with that?
Probably down, I had to guess.
I don't know. You could do both.
You can. 15.
I mean, 15, so
doesn't matter which way the elevator's going.
Yeah, they just bought Louisiana Pacific, right? I mean, what's LPX's trading multiple? Like 3 or something ridiculous. So
going to 15.
Yeah. I mean, but that's because the E is going to go down. So, I kind of wonder, they say, okay, well, even with that fade, do we still think that we could make 7%? Like,
yeah,
I think you kind of get yourself somewhere that you need to go. I don't know. Ask a follow-up question, somebody that's got access. Holler back. The 10 are strong.
I love when Buffett comes behind me picking up my trash, like HPQ, LPX.
Oh, did you own LPX? Well, I can't even ask.
Was
you
that?
Can I ask you that?
I own LPX.
That you might be interested in.
I want to get a good one. Have him buy a good one. It's not happened yet.
Taiwan Semi was interesting.
Yeah, what do you think about that?
Yeah,
I mean, it makes sense. I don't know how to. There've been 3 issues on this show, geopolitical risk related, and I've said I don't know how to handicap any of them, and I'm not going to start now. Over 2, I think. Well, actually, I don't know what we are on the China issue, but I've always thought it was too hard.
Do you think that the main issue with that is geopolitical, or do you think there's a valuation issue? And has Buffett buying that sort of answer that question?
I think
it always looked expensive every time I looked at it. I haven't looked at it in a year though.
I think it's off some, so it might be cheaper than you remember, but it is an interesting question to ask yourself. What would it be trading at if it was on US soil?
Oh God, it'd be way higher.
It is so therefore, is that like if you frame it that way, is the discount appropriate?
What is there a discount? Are we saying there's a discount in it?
Well, relative to if it wasn't geopolitically risky.
Yeah, because, I mean, depends if you're talking about earnings or cash flow, because they're completely different things. But
a lot of reinvestment, right?
Yeah.
CapEx
so is you could argue it's pretty rich on a cash flow basis. On an earnings basis, it's pretty cheap. Strong balance sheet.
I find Berkshire's buys kind of interesting that they do seem to span. On one hand, they're buying LPX, which is a very traditional deep value type pick, and then on the other hand, there's TSMC, which is a compounder probably off the end of what I would be prepared to pay for something like that.
It might be kind of GARP, right?
GARP. All right.
But I think like LPX, you're dealing with what OSB, and then this like basically it's like commodity plywood, and then they've got this siding product. And I did some work on the siding product, and the guy that I talked to was like, yeah, it's pretty commoditized. I mean,
but as we've discussed before, 2 times earnings.
Well, but it's super normal earnings. It's not
true.
I mean, this fair. Is, so I don't know. I don't know what the normalization is, but I think you have to pay a cheap price for that kind of a business.
Yeah. But that's why I just think it's interesting to have those 2 picks in there, like that. And plus they bought Amazon, remember Amazon, that was a year ago or something like that, a little bit more than.
And Restoration Hardware, they bought more of it. It looks like, seems like they are buyers of the structural bull housing thesis.
A little bit, huh?
Yeah. I mean,
I guess Clayton's been doing really well. So I don't know. Maybe there's.
Well, the more unaffordable homes get, the better Clayton is as a value proposition.
I saw somebody said that they might have had some insight into TSMC because of Apple. Apparently, Apple buys all of their inventory. Does that make sense?
Unique thing though. I mean, they sell
everybody
a lot
knows
of,
that. Yeah. All right.
I think
fair
so.
enough.
I don't know.
I saw the tweet. I'm regurgitating tweets. This is like me retweeting something. I'm retweeting it on a podcast.
There you go.
I try to let everybody know when I'm retweeting, and just some random dude I found on Twitter said something. So
it was also like 20% lower for a while. I think. I don't know what their price was. I haven't looked at their 13F. But
JT, what's your shirt say? People want to know.
It says Journalytic. This is the software product I've been slaving over for a couple of years. That's hopefully not too distant future is going to be available for anybody who wants to get in there and get some work going. So
we're going to get
like JT's veggies. That's how you can implement them.
We're going to have a pod where JT lets us all know what it is coming up sometime soon.
I should do that. Definitely. I'm excited. I think it's going to help a lot of people, which is going to feel good. Got a great team working on it. We've been busting our ass for a long time. So it's going to be fun. Yeah.
Norbert Liu has bought Smith & Wesson. All those things are cheap, right? Ruger, Smith & Wesson.
Is that one of those peak earnings things? I don't know. Where are we at with the Armageddon? And
yeah,
that's right.
Do all the preppers' basements already full of ammo, or I'm not sure.
I don't think that's possible. That's possible, honestly.
You can't get to it's a bottomless.
For like a decade, every time there's a Democrat president that seems to be a good time, but I don't think they slowed down at all when Trump was in power.
They're taking our guns.
I think that's so they always trade cheaply because they're ESG unfriendly.
Oh yeah.
Yeah, maybe there's some cyclicality in there. Smith & Wesson's been around for a long time. Is that the gun that won the West?
I mean, on an earnings basis, it's really, really cheap. Not the cash flow. I don't know.
Colt. I think that was the Colt 45, wasn't it?
The
Winchester. I don't know.
Winchester 30-30 lever action. The gun that won the West.
Yeah, I mean, you're probably paying no more than 7 times normalized cash flow. I'm just eyeballing this. That doesn't seem like a ton of Seems like if you think the S&P is going to do somewhere less than 9, and your entry multiple is 7 times actual cash flow, that equation seems like one's an outperformer and the other underperforms.
Kathy says as soon as rates go down, if the Fed's smart, then we can all have that roaring 20s again. That's the only thing holding us back.
I don't think that's it, but
possible.
We'll see.
That's it, fellas. We've made it.
We made it.
Full time.
Everyone, have a good week, except the one guy that says that I have verbal diarrhea. I hope you get diarrhea.
Verbal diarrhea.
Cheers, everybody.